Hey folks, welcome to Markets Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, August 17th, 2011 is sponsored by Realtik. Alright, let's get right into the action today. Markets are on a generally wild roller coaster type day again. We opened sharply higher, ran up for the first hour of trading, sold sharply, and are now turning back around to the upside here. And again, overall markets are generally flat, maybe slightly to the downside as we see the Dow Jones Industrial Average down 26 points, NASDAQ is down 22 points, and the S&P 500 is down about 2 points on the day. So again, it's a slight negative bias today. But what's interesting about this action, folks, is that the markets continue to be sideways driven. Sideways driven after such a good move up over the last week is generally an indication of consolidation. And in this case, off of a move up, it's known as bullish consolidation. All right, so that's going to be the key thing that I want to discuss here. If we zoom out to last week, and this is last Tuesday's pivot low that we nailed and called to the upside as a buy, turning out to be a huge move to the upside. But you can see this big move to the upside, and now this choppy consolidation, that again is known as bullish consolidation for now. Now, there is a way it would fail, and I want to make that clear here, folks. If you break the 117 trend line right here, if you close below on a daily basis below 117, that would negate the in spirit of bullish consolidation pattern, and you'd actually start to look for more downside. All right, whether or not you go back to the 115 and change level, or possibly even the 112 or 110 level, is up in the air. But that would be the only way that it would change from bullish to bearish. Okay, and again, I know very many people out there probably don't know much about bullish and bearish flags, but these levels that I give you are absolutely perfect in terms of understanding and coordinating the market moves. All right, now, so we know the 117 level. As long as we stay above 117 and chop sideways here, overall, in the next week or so, you probably look for more upside. That's the general bias I have right now. But I did think it was very fascinating today to look at the levels. The levels have worked so perfectly. And again, take a look at over the last couple days, this purple line here, this pivot low, pivot high right here on the 12th, which was last Friday. Then it was the low on Monday, the low on Tuesday morning, and ultimately we pierced it, then got back above it, traded higher. Look at that low pivot coming into play again today. And again, over and over again, you tagged it right there, got another beautiful bounce to the 50 moving average, and then also came back down, got below. But then you got a bottoming tail, and a bottoming tail is very significant because it tells you a reversal is taking place. And again, if you're looking at an intraday chart or a daily chart, you look for these reversal signals, and that gives you a great bias to be on the long side when you see it and when it occurs. And sure enough, see how you have a long tail here with a close in the upper portions, and it's at the low of the day. That's very important. It must be at the low of the day for a bottoming tail on an intraday basis. If you're looking at a daily chart and it's a bottoming tail, it must be at the low of the recent history of the chart. In general, I say 3 months. You have to look back 3 months. If you don't have a lower low past 3 months ago, then that can be a bottoming tail on the daily chart as well. But in terms of the intraday 10-minute that we're looking at right now in the SPY, which mirrors the S&P 500, this would be a bottoming tail that tells you the market's going to start to move up. And sure enough, look, 1, 2, 3 candles to the upside. Now, obviously, these two moving averages are going to work as resistance on the upside. That's going to be a little problem for the market to get through. We'll have to see if it holds up or does it start to come back down here over the next, hour or so, hour and a half of the trading day. Now, you may say, well, what was about this low? I mean, how did we know this low was going to be put in here and not go to the 200 moving average? I mean, how do we know that that is really the low or that was support? I mean, why did the market have a bottoming tail there and reverse and start to move up? And I'm going to show you again something, folks, and this is one of the major reasons why you must come join InTheMoneyStocks.com, taking the 7-day free trial. And there's the 7-day free trial for the Research Center, which incorporates everything listed on InTheMoneyStocks.com underneath the Research Center. It's a huge amount of stuff. And also, you can have a free trial, 7-day free trial to the Intraday Stock Chat, where you look at our charts live, you hear us making calls, swing trade calls, long, short, whatever the market's telling us to do, day trades. It's basically all inclusive there as we give commentary throughout the day in the Intraday Stock Chat. But the bottom pivot right here, folks, check this out. This is going to blow your mind. What I want you to do is take your pivot low from a couple days ago, from last Friday, and connect it through the pivot low from yesterday. As you connect that through, I want you just to continue to extend that line, and look at that. Isn't that crazy? And again, this is what you have to be doing in terms of looking at charts. You want to be connecting lows, connecting highs, finding out where there's going to be key support and resistance, and you just play them. And again, this is just an intraday chart, but you can do this on the daily chart, and that's what we do in the nightly research center videos and all that stuff. We go over this stuff in that forum, and that gives everyone a good basis to find their own trades. I give out trades as well, but I think it's important that we teach everyone how to do this. And again, look at that low pivot. That's how you knew there was going to be support there. And if you had that line in before, you would have bought right here. You didn't even have to wait for the bottoming tail to buy, to close. You could have bought right here, and you'd literally be up from this pivot low now. You'd be up 75 cents on the spiders. 75 cents in a 30 minutes, 40 minutes. That's amazing. And again, the signals are there. The charts, I always talk about the charts in terms of a book. The charts are a book in a foreign language. It's up to you to decipher that language. When you do, it all becomes clear and the profits start just coming in massive amounts. All right, guys. Having said that, notice the spiders continuing to head up. They're going to have resistance right here. The market, again, getting a little bit on the weaker side after the 1 hour, first hour push higher because the dollar started to catch a bid. The dollar caught a bid. Let me turn to the UUP chart, which is the ETF for the dollar. See this move up on the dollar? That's really what brought the markets in. Now the markets are just kind of coming off their lows as the dollar is starting to get weak over here. Remember, the markets move inversely to the dollar. So whichever direction the dollar is going, in general, the markets will move in the opposite direction. All right. Gold, let's take a look at the GLD today. The GLD is up about 75 cents, trading near the highs of the day. Again, interestingly enough, right here, you can see there's a little bit of double top resistance that it just banged into. And again, let me ask you, if you're a scalper, if you're a scalp trader, which means you're an intraday day trader, and you jump in and jump out of the market very quickly, what would you have done at that double top right here? You would have shorted it, right? Double top resistance. You quickly go short and look at the pullback. You actually got as low as this little pivot down here, which would, in scalping terms, that's a short from 174.65, we'll call it, and you went all the way down to about 174.40, 45. So a nice little quick scalp right there. Now, ultimately, this looks like it's starting bullish consolidation, so eventually it may break up, but obviously the scalp is just in and out, in and out. A scalp should take you about 30 seconds on average to be in and out of, and that's the beauty of what we do here, all right? All right, folks, let's take a look at the USO chart today. The USO is actually having a decent day, and the leaders today are, interestingly enough, the bank stocks are leading today with positive gains, and oil stocks generally are doing pretty well. The USO, again, it's off the highs of the day, but just showing you the daily chart. See the two blue lines down here? That was the long entry that I gave out in the nightly video inside the Research Center on the USO, which is oil's ETF. Look at how perfect it was, and look at why. Pivot low, right in this X area I gave them. I said, guys, go long anywhere in there. Sure enough, you get a perfect entry in that area, and look at the move up on the USO. Beautiful move up. Again, it's having a continued move. I do think it's going to go to the 20 moving average on the next little move up in the market when that does occur. Right now, again, you're having a little bit of an update on oil, which is helping stocks like Chevron. Let's punch up Chevron. Chevron's trading up. Here's the intraday on Chevron, so we can take a look at that. You can see it's off the highs, but it's still up on the day, 40 cents or so. And we can also take a look at ExxonMobil, which is also up on the day, trading up about 50 cents. Okay? So a nice little move there. Very nice to see. Bank stocks, I mentioned bank stocks were doing well. These are the two sectors really that are carrying the market today, banks and oil stocks. And you can see Goldman's actually started to move up even more. It was up very nicely earlier in the day, came down to go flat, slightly negative. Now it's making a run again, which is good for the markets. The markets need the financials to participate in a rally to really have any sort of chance of continuing their move up here. Bank of America, very nice as well. Even though it's off its highs, it's still positive on the day when the overall market is slightly negative, and you can see that's even starting to inch up just a little bit on the day. All right. Scanning through, Dell had earnings yesterday, folks. Dell is getting hit by a little bit here, down at 165. One thing I wanted to mention to people, I called this out yesterday to members of the chat room and the Research Center in the nightly video. We took a look at the move up in Dell into earnings. Take a look at this. Dell basically went from a price of $13.50 to a high of $16. That's $2.50 move on Dell. Basically a 20% move higher on Dell going into earnings. Should anyone be surprised that it's pulling back on earnings after making a 20% move in 4 consecutive days going into earnings? Not at all, because it basically tells you that it was factored in. It was good earnings were factored in, and earnings came in, a little on the weaker side, so it's getting pulled back down here, obviously. But again, notice the chart. 4-bar surge to the upside. That tells you a lot is already factored in, and notice how it went right into the 20 moving average here. I mean, what did you really think anyone was going to get out of this? I mean, maybe it goes up to the 50 moving average on earnings. There's almost no upside potential there, and likelihood of downside is right there. So again, the charts really tell you. I mean, if you use common sense, it's just common sense and discipline, and then you can be a master trader making millions of dollars. And again, we help the hedge funds make billions. We help the individual investors make millions. The same information we give to the hedge funds, we give out to everyone else in the research center and in the intraday stock chat. So it's there for the taking. We don't discriminate, in other words. We're there to help everyone from the big fish to the small fish. And again, folks, I encourage you to come join us here at inthemoneystocks.com. 7-day free trial, no obligation. You can cancel before the end of it, and you're not charged, very simply. All right, guys, have a great afternoon. Come join us at inthemoneystocks.com. Take care.